All right, hey guys. I'm not going to do a full recap today on the stocks. I'm just going to talk about moving averages and what I use in my setups when I'm looking at charts. I always have three charts running on three different time frames. One's a daily for 3 to 6 months. One is a 5 minute for 5 days, and the other one's a 1 minute for 1 to 5 days. So right now I have four charts open. I'm just going to use it for kind of show and tell purposes, but primarily when I'm looking actively in the market, I have three windows open. I will usually have my 1 minute up here. I will have my 5 minute here. I will have my daily here, and then I'll have a level 2 window right here on my screen. I'll put up a screenshot maybe at the end of this video. I'm not on my regular trading computer, but we'll go from there. So anyways, this is the stock I was looking at today. This is busy. A lot of people, can make digs that technical analysis can be hard to look at, and for a new trader that doesn't have trading, trained eyes, this is very difficult to look at. You've got a lot of colors, you've got a lot of numbers. I've put these white lines in as support and resistance levels. You have another thing down here, another type of oscillator. It's called a relative strength index. You have your volume indicator here. A lot of these things you guys are familiar with. So this can be very busy. It can be intimidating. Your eyes can get lost in focus and hard to look at and really hone in on the information that's coming at you, because that's all trading is it's you perceiving and interpreting data and then deciding where to go from there with your entry and exit points. So I will break it down. Let's go to a basic chart, same time frame, same stock. This is actually on the 5 minute. I'm just going to do it because it's a little bit easier. So here is your basic candles and stock price and price movement and action. You have no reference points beside this natural grid line that's set up in the charting database or platform that you're using. So I use Questrade. I also have QuoteStream. There's always this kind of basic grid. It helps you to just kind of figure out, okay, there's the $5 mark, and it runs straight across here. And then these vertical lines are usually time frames. So this is great. You can use this to look at charts. When your eyes even become more trained, you can start to actually pinpoint. Right away you're going, okay, this is a major support resistant spot. What is this? Oh, look. Oh, it's $3. Okay, it's the whole dollar. Where's the next one? Oh, it came up here, topped out here, bounced down. Where did it tap out? Just under. Oh, well, look at that. It tapped out at $4.50, and it came down here and settled on the $4 mark. So you can see it naturally finds the path. It doesn't need all those fancy lines. The stock price is going to do what it's going to do. We don't have control over it. Any indicator, anything you decide to put on your screen does not control the stock and which way it's going to go. So don't ever think that. I kind of feel that I thought that at one point when I first started out. Obviously realizing just that was totally retarded. So yeah, this is your basic chart. This is it. Pretty simple. You can go off this. It works just fine. You can look, watch, and follow each candle as it's built and go from there. But you can add a little help to yourself. So down here, we'll start with the 9 moving average. So moving average, there's two types of moving average. There's a simple moving average and there's an exponential moving average. The simple average is just a basic collection average of data points, i.e. prices, stock price points that the stock has hit over a time frame. So you are in control of the time frame. I use a 9, 20, 50, and 200 EMAs. So I have 4 moving averages on all of my charts, all 3 of my charts. So for simple purposes and easy to just look at, I've only put the 9 moving average on this chart, and we'll just go from there. So this is an average of 9 days and price points from each day. How it works out in the graph, computers figure that out. So how we interpret it, well, it simplifies and smooths out price action. So it's still following the price action. As you can see, it still comes up and down and dips the same way the price action does, but it's a little smoother. This is choppy, up, down, up, down, up, down. The difference between the exponential moving average and a simple moving average is that exponential moving averages is weighted on the most recent side of it. So let's say I have 9-day moving average. It's going to take probably the last 4 or 5 days of that 9 days and really kind of condense it and build it into a more flowing average. Whereas the simple moving average really is just basic. It's exactly what it says. It's simple, it's non-weighted, and it just takes the 9 days, spreads them out, and it flows. So I use the EMA. Have I ever used the SMA? Honestly, I haven't. I use the EMA because I learned of it from some other traders that I see as successful. So I thought, you know what? Those guys are using the best tools. I'm going to use the same tools that they are, because that's what this is. That's what charts are. That's what moving averages are. That's what RSIs and MACDs and other things that we're going to go over. That's what they all are. They're just tools that you're going to put in your toolkit, and you're going to teach yourself and train yourself to be the best at using them and how to read them. So how I look at a moving average, it's like following the lines, like drawing within the lines. So whenever a stock price decides to cross over a moving average, it's either a breakdown or a breakout to the upside. So we can see it. This was the after hours. We were just kind of puddling along, kind of consolidated. We popped up out of the moving average. But what'll happen to a stock is it'll get too far overly extended. And it'll either run into some sort of resistance, and you'll see the stock will sometimes just pull right back to the moving average, consolidate for a second, and then it'll take off after that. There's not a lot of volume in after hours and pre-market, so this just kind of slumped under and just kind of consolidated along the moving average, but in a downtrend. And then we came here, we had the open of the day, we broke down, we sold off right under the moving average, and then we came up here. And the moving average is dynamic, so it's not a set line that is going to just stay there the whole time. It is going to move with the stock price, but the stock price will respect it. You can see it here. It came down here. It found a support level, maybe based off of previous support, and it came up here and it touched the moving average, and then it pulled back again. And then it tried to get it again with this long wick. It touched the moving average and then pulled back and touched the moving average. And this is testing a support. So a moving average, as these can be support and resistance, these static lines, the moving average is a dynamic support and resistance. It's ever changing. It's always flowing with the stock, and it can respect it. It can also get highly overextended off of it, which we're going to see right here. So at 10:15, the stock had news that came out a few minutes earlier about the CE designation or conformity in the European Union, and this stock just launched. It took off, and here we go. See, we're getting away from that moving average. We're pulling up. All of these are pullback, and we're highly extended here. Now, this is relative, what people think is highly extended or not. Highly extended from the moving average is when the stock price comes 10, 20, 30 cents off of it, and it can climb, it can run parallel to it, but it kind of always gravitates back to it. It's like a magnet. So pop up here, we find resistance. This was a pullback. At this time, this moving average was probably sitting a little bit closer to it, and then it extended away from it again. This moving average pulled back as this extended away. It didn't dig right into it. And then we arced around here. We found resistance up here in the 440 range, and then we came back down, and we respected it right at the $4. So not only was support $4, but our moving average at this time frame, at this point in time, was weighted down to the $4. So this stock came down, touched it, respected it, and then it continued to grind and follow along, and then it found another spot where shorts covered or buyers jumped in or whatever it was. This was a setup here. I probably wouldn't have watched this setup on the 5-minute. I would have watched it on the 1-minute for a little more detailed action. But we came down, we popped up, we tested this a couple times, we tested it, and we made some higher lows, and then we popped and we jumped right out of it. Again, we came right up here to 480, tested it multiple times, and then we came down here and we popped under the moving average, and we just kind of followed it. And this is us consolidating in a bit of a range-bound pattern, but we consolidated. And the stock needed time to figure out what just happened down here. This is such a big emotional move. This isn't just buyers, this is shorts. This moved up really high in after hours. Here you go. Here was yesterday's price action, $1.95, $2. I found this in the stock scanner last night, and I found it right around here, this big move. So we had 213, up to 327 after hours, and then we popped up again to 380 after hours. This is after the market's closed. There's still that much action. And then we followed through, and we popped up again in the pre-market right after it opened, 710, and then we started to sell off. So there was a lot of short interest here. I was actually looking at it as a short because of this big movement out, but it had good news, and it showed. It sold off, consolidated down here, and then just launched after that second. It was almost a reiteration of the news that had already happened at after hours, and this thing was gone. It was off to the races. So we sold off, and we're just respecting this moving average, and that's why it's an average, because as this price is up, down, up, down, up, down, this will just stay the same. It'll run through the middle, but what you want to look for is these overextensions off of the moving average. When it overextends, it's usually, and you're in the stock, let's say you bought here, you bought there, and it pops up and you start to see this overextension, you can almost guarantee that if you're coming into a known resistance point, you're going to have some sort of a pullback. We saw it here. We came up. We were coming into the $0.50, $4.50. We almost made it, and we pulled back. That, that's an instant exit in my eyes. Obviously, this is on the 5 minute. There'd be a little more price action in the 1 minute. I'll go to 1 minute so you guys can see. Right, the 1 minute's a little more choppier, but same thing. Overextended. Right in this void. And look at overextended, pulls up. This was the one into the $4. This was the first one. $4, pulls back. Right here, out, sold. So if you got in here at $3 and you rode this 1 minute candle, 2 minute candle, 3 minute candle, 4 minute candle, you would have made $1 per share in 4 minutes and sold. There wasn't big pullbacks on here, so you probably wouldn't have gotten scared and jumped out or worried about a stop loss. You would have just rode this up. This is like a beautiful stock. This is a light little pullback price action here, but it really didn't pull back too far. 370 down to 350. I mean, you would have already been up 50 cents. Your stop loss probably would have been 292, 290, 285 even. So yeah, anyways, so back to moving averages. So once you see it extended off of this void, usually a good time to get out. And the price action showed it. The previous price action showed it. So again, we will look. The downtrend's a little harder. Extended off of the moving average on the downtrend, it does make a recovery, but this is a bull trap, right? You think it's going to make a recovery and pop to the upside, or maybe do a gap fill and finish this? No, it rolls over and keeps on going. There's a lot of short interest in this at the end of the day, obviously, and also the profit takers. Everyone was just like, okay, this stock's done, almost topped out, $4, and it's just going to sell off. So, and then it had after hours earnings, and this thing just keeps going. So I will go to the next. I got one more chart with a 20-day moving average in EMA. So same thing. It follows, but it's based off of 20 days of price action. So it sits a little bit lower because the price action goes back a little bit further, but it's still weighted. It's still weighted to the more relevant price action in those 20 days. So maybe it's taking 10 or 7. I don't know exactly what the ratio is, but as you can see, it's a little bit lower, right? So also works as a dynamic support and resistance level on bigger moves. So really extended out, came down here, broke through the 9 moving average, and came down here and came relatively close. I would imagine that before it made this upside move, that this moving average was probably sitting right around here, came down here, touched it, and then acted as support, and it took off. Also, if you look, this is $5.50. So this moving average was sitting right under this $5.50 mark, and then it took off. These are all little overextensions. If you set up a moving average in your chart, and you look at any of these big gaps, I can say 9 times out of 10 or more, 10 out of 10, you will see a pullback after it. Very rarely does a stock go parabolic forever. Stocks don't just go up forever because profit takers and short sellers will always bring the stock price down. So I will go back to my original chart with all the moving averages on it. So the 9, the 20, the 50 is green on this one, and the 200. And you can see how far off they are, right? So this one goes back 200 days. This is the last 200 days of average price. Once you start to break down in moving averages, you can expect the stock to start to plummet. But at the same time, depending on how steep it breaks down, you can expect a recovery. So here's the 200 moving average, and let's look at where we've respected it here as a support level. So we've broken down, we came down really hard from $3.60 all the way down to $3.22. That's a good move. That's like 40 cents up for grabs on the short side. But we came down, we smashed into this 200 EMA, and then we popped up for a nice little like half recovery, 20% recovery. Let's see if we can find another one. So these are all my support and resistance levels I've drawn and throughout the day. I'll just open up the chart a little more. And you can also see how my support and resistance levels were respected all day long. So I found a little bit of resistance here, ended up finding support for it over here. $3 whole dollars are always big resistance or supports. So found the $3 in this right out of the gate, right? And then once we broke out of $3, we were off. But then you'll see right here, we actually had this is where I showed you before. We came down here, got extended off the 9 EMA, and we came down and we retested it as a support. Well, that support was also $3.80, which was $3.80, $3.77. I told you yesterday, give or take, 5-10 cents. It's not an exact number, it's not exact science. But we found $3.80 as resistance here. We ended up finding this support over here. So I always say look to the left. And I had lines on this. On my other computer, I had all sorts of lines that I'd drawn on this because I was just amazed at the way that this came down, respected this support, popped up, fell off, came down, respected this support, and it started to respect the 200 EMA here, started to make a little bit of a higher low, and then that was it. It took off again, 1, 2, 3, and it came down again, tested this, 200 EMA, bounced up, broke through all of the 4 moving averages. Didn't quite test the $4, but came close. And then that was it. It just couldn't hold this level 440, sold off, and down we went. So, I'm not a master at explaining moving averages. I'm not a master at explaining any technicals, as I'm still learning a lot about them myself, but I'll do my best to share the information that I have with everybody, and go from there. So if you have questions, obviously you can ask me, and I will always do the best I can to answer within my realm of knowledge. Of course, there's always Investopedia and the internet and all sorts of other resources to pull this information from. But for now, you got to remember exponential moving averages. I run 4, 9, 20, 50, and 200. It's a weighted average of price points over a time frame. So, and it will always be dynamic. It is always going to move with the price. It is, if you look at an old chart, yes, the moving average is there, but if you set up your moving averages and watch the price action throughout the day, you will see the moving average go up and down just like a wave, and it's just a nice, smoother average of price, and it can help you find entry and exit points, and it can help you decide, okay, you know what, this stock is getting pretty highly extended off the average. What's going to happen? Here on the 1 minute, one last time. Here's the after hours. Look at these voids. Extended off the moving average at 9 EMA, came down and tested it, grinded along it a bit, popped up, extended over it, grinded parallel to it, but found a home and came back and tested it. If you look at the price points along the way, what do you got? 450 it tested here. Just, $4.80. $5 and roughly 50 cents in this area. Tested it again here, $6, came back, broke underneath it, couldn't hold. When the stock gets so overly extended, when it has such a big move like this, what is that? $2.40 over 5:20 to over 30 minutes. You know, not a bad trade. $2.30 over 40 minutes. A share. I made a joke to Ryan Judge that we're all sitting around waiting for an SL Supreme Grow license when you got stocks out here that are moving $2.85 to, well, just in day trading, $2.85 up to $4.80. So a nice $2 move, and then into the after hours up to almost $7. I think $6.50. So it's good to open your eyes and learn about some other stocks and some other sectors. But really, I didn't even care about the sector. I only cared about the price action and the ticker and the volume that was coming in. This stock traded 43 million shares today. The float is only 4.2 million. It changed hands. The float got flipped 10 times. So just let that sink in for a second. That's a lot of new hands. A lot of people that want to make money, right, on the way up. A lot of people that sell on the way down. But it really held its own all day. I mean, for opening at 330, falling down to finding a base at 285, and closing around $4, it did pretty good, I would say. I'm really excited to watch it tomorrow, and I'm hoping. I don't like trading Fridays. Haven't traded all week. I still have my same account, $928.14 in my small account, so I have not made a trade this week, but I will watch this tomorrow. I'd like to short it because I see a gap here back down at $4. I would love to short this stock and walk away with $1 a share. That would just be amazing on 200 shares. But am I going to get that? I don't know. I'm going to wake up tomorrow. I'm going to check out the pre-market. I'm going to make a watch list tonight. I'm also going to check the pre-market with that tomorrow. And then I'm going to, I'm going to try and make a trade tomorrow. I'm a little gun shy right now, but that's okay. It's only because I don't know. My emotions are kicking in and just want to do good. That's all we want to do, isn't it? So that's all I got, and I hope you enjoy it. And we'll chat later.